Welcome back, everyone, to another Stock Market Open live stream. Today is the Monday before the Nvidia earnings that is going to send everything to the moon. At least, so we hope. Nvidia earnings are Wednesday, and that's really, honestly, the big catalyst this week. It seems like this week, we'll get PCE is really just a setup for next week, where we'll get the jobs report. Although then a lot of people wonder, is this jobs report, does it even matter? After all, we've had these jobs reports before, and then they just get revised away, and then it makes you wonder, why do we care about them at all? Who knows? But anyway, we do also have heads up from the United States that an Iranian attack is now not imminent, which is good. So it could be a possibility here that folks think the Hezbollah attack against Iran Saturday evening U.S. time and Sunday morning Israeli time was sort of the first volley from Hezbollah. What they deemed to be a success, not a success. From the view of outsiders, I mean, it's unclear that any of their rockets did anything. That Iron Dome is pretty dang tight. A lot of U.S. dollars in it. Better be tight, especially if Trump wants to build an Iron Dome in the U.S. That's what he says, although I don't know why we need that in the U.S. I think longer range missile defenses are a little more important, which would be more similar to sort of your David's Arrow or your David Sling or Arrow 2, Arrow 3. But, yeah, I think it's populist. It gets votes to say, yes, we're going to have one too. If they get one, we get one. Anyway, we'll see. Yeah, in the meantime, it looks like stock's kind of pretty boring right now. I think what was a lot more entertaining, actually, was watching Bitcoin. I think Bitcoin almost hit 65K. Let's go take a peek at it. Yeah, it's dropped back down. We'll go to the 30-min here and show screen. Yeah, it did. Look at that. Look at that. So the lines are doing their thing again. You can see after we essentially broke out over 60,719, we got rejected once, almost twice, at 61,700. We actually ran all the way up and then went to ride. Now this line, Bitcoin just literally moves line to line. It's kind of funny. And people call the lines Fugazi. Anyway, 63,840 is the new line that Bitcoin's chilling out at. 63,840. Next stop, by the way, would be 69,000. So, not bad. All right. Then, yeah, pre-market, Q's down a schmidge here, Tesla's down a schmidgy, Enphase is actually up 1.3 in pre-market, although pretty thin trading for Enphase in the pre-market. Yeah, Palantir's down about 85 bips, along with Snowflake, and, yeah, not terribly much movement in the world of the stocks. Let's go flip pre-market, post-market here. We've got, Ubiquity's too thinly traded to get excited over. Ubiquity, apparently, we got up 8% in the pre-market here. But it was up 9.8% on the day on Friday, which is remarkable. And Redfin's up another 2% after a pretty solid rally on Friday. Flip down over here, Elf Beauty down 4%. Makes me wonder how Urta is after... Buffett threw some dollar hollers at it. Yeah, slow advance here. You're getting a little Buffett advance. Buffett advance. Go, go, go. Alrighty. Let's see here. We did just get data about a minute ago. Durable good orders actually came in. Wow. Almost twice the expectation there. 9.9% versus 5%. Expected. That's pretty good. And then you've got durables X transportation negative 0.2. So wow, transportation really had a push there. Is that for the quarter? That's for July preliminary. Capital good orders, non-defensive excluding air, negative 0.1. Pretty benign read there. And then capital goods shipments, non-defensive ex air, negative 0.4. So, but that durable good orders, that's a nice pop. That should push, let's see, that should push GDP a little bit on the Atlanta Fed now. Let's listen in here.
Dropping interest rates, and we continue to expect pressure there. You want to take a long view on the dollar, Joe? Just blur your eyes and look at 100. Big psychological area, big technical support. Back to you.
Great, Rick, thank you. Let's get to Steve Leafman. Steve, I think Rick said big asterisks, big asterisks. I don't know, he kind of mumbled it a little bit. I don't know if you were listening and were wondering what the heck he said, but apparently there were some caveats to some of those numbers. But I misunderstood it. And you're back. You're back. Yeah, you're back in a big way. Back bigger and better than ever.
Yeah, wearing I got a tie on, which I like the other outfit without
big
the tie,
asterisks.
right? I mean, that's a better thing. But here's the thing. I think the big thing with Boeing, the negative last month, positive this month. Rick is right, and I want to explain why he's right, to point out the 0.4% decline in non-defense aircraft goods shipments. That's a part that flows into GDP, the shipments of these things, and that's going to be a negative for GDP for this for the third quarter. We've been running 2.5, somewhere in there. We have had weakness in the ISM manufacturing index. That seems to be showing up in here, Joe. I'm seeing some other negatives here when it comes to new orders for electrical. Let's see what else is negative here. New orders and shipments for motor vehicles and parts. Defense is good. Sorry, that did well. But overall, Joe, it's a weak number when it comes to also the business investment proxy. So let's think about the context here and where the Fed is in all this. We had been looking for months and months and months, 30 months, Joe. We've been following the inflation reports on the edge of our seats. Now we're sort of like, okay, inflation is more or less under control, still some work to do there. Now we're looking at the other side of the mandate, the employment side of the mandate, which is a proxy for the growth side of the mandate as well. So I think when it comes to the sensitivity of the data, Joe, it's going to amount to watching the growth numbers, things like durable goods, things like employment. We do have an important inflation report this Friday, but to me, as it was last month, the income and spending numbers part of this inflation report will be more important to me, I think, than the actual inflation. Joe?
Steve, we were talking actually quite a bit about, as we always do, about what to expect, Fed funds, futures, et cetera. Do you think that if we get a big surprise, do you think it would be fewer cuts or quicker, bigger cuts? Where's the risk?
Well, it depends on which way the surprise happens. I think the Fed.
I want to know. I want to know now. I want you to tell me now which way so it won't be a surprise for me.
Well, Joe, I don't want to take any of the drama out of all this, but I think the Fed wants to move gradually. I think it wants to feel its way towards whatever that neutral rate is, which it doesn't know. And that would speak to me of gradual declines in rates, maybe even a pause in there. There are members of the committee, Joe, who think we're very far from neutral, and they have a lot of work to do to get into a position to aid the economy. And there are some on the committee who want to move more slowly and who like the idea that, hey, I want to keep rates higher because they think it's ultimately healthier for the economy to have higher rates rather than some of these low rates, which have distorted, say, investment decisions over the course of the past several years. So there are members like that. And that's, what's interesting, Joe, is you ever been in a rock and roll band, Joe?
I sang 25 or 6 to 4. That's the last thing I ever did. And I was laughed off the stage.
Well, the Fed is like a rock and roll band, Joe. You know why? Because we always argue about tempo. What's the right speed? So, the Fed is going to be no different. They're going to argue over speed. But the thing that I said, I think, which is important at 7 o'clock, that's a normal kind of situation. We should be arguing over speed. How fast to get there? There's uncertainty, but there's a lack right now, I think, Joe, of urgency.
I'm embarrassed to admit that. And you probably have done this. I'm embarrassed to say I had a Les Paul that I was playing, and I had a Marlboro in the string sitting there with, like, it was in high school. I mean,
I could totally imagine that. Here's my cigarette ready to go. Oh, no. Okay, so here's the actual durable goods manufacturing shipment orders docket. So let's just go right into it here. This is the seasonally adjusted monthly. Let's go with the percent change, June to July. And then we'll go to the non-seasonally adjusted percent change for the year over year. So let's see where some of these things came in here. So this was that big new orders read, which is really good. Year over year, though, it came in negative. So some form of potentially seasonal adjustment there. Let me see here. Well, the number is still higher than what we had in May, and it's certainly higher than what we had in June. So excluding transportation, the number came in negative, and then year over year was actually up 1.4 rather than down 1.4. So it's a little confusing given the seasonal adjustment there. Okay, let's see if we could try to figure out some of the details as to what this is. Manufacturing with unfilled orders. Okay, that was 15.5% growth year over year. That was negative 2.8%. So negative year over year, but up on the month. And again, this is for July. Okay. You know what some people are saying, by the way? I'm hearing that shipments are popping, potentially due to threats of Trump's China tariff, right? So basically trying to get ahead of the potential tariffs by stocking up now. Just an just a theory. Okay. So primary metals down, fabricated metals just 0.2%, machinery 0. You can see these all here. There you go. So it's really driven by manufacturing with unfilled orders. Computers and electronics, negative. But computers and related products, positive. That's confusing. But then it's broken down into communication equipment, which that was negative. Okay. Electrical equipment, negative 0.4. Motor vehicles and parts, new orders, negative. Okay, so what transportation came in so positive? Oh, defensive aircraft and parts. I guess that's why we have the non-defensive section that came in negative. So, okay, interesting. So you can see a really big driver here in defensive equipment and transportation. So that was a big boost. That was a huge boost. But then also, if you still go to the top and you look at excluding defensive, really it's this section right here. Manufacturing with unfilled orders. That's a good thing. Capital goods, new orders. What's number 3? Capital goods include... Capital good industries include non-defense, small arms and ordnance. Okay, so non-defensive is still small arms and ordnance. That's a little confusing. Those sound like arms to me, or sound like defensives to me, but okay. farm equipment, construction machinery, mining, oil, gas and field, turbine generators, power transmission equipment, pumps, compressors, comm equipment, search and nav, medical supplies, boats. Okay. And that number was excellent at 34.4. And the year over year, though, this is so confusing. Look at the year over year, negative 0.7. So everything that looks great on the month over month is actually negative on the year over year. So that's some funny business. And even the defensive stuff is negative year over year. That's quite confusing. So, okay. If you say so. Anyway. All right. Let's listen to this chat for a moment.
Mr. Tariff, Kevin, and Mr. Never Cut Entitlements, Kevin Hassett. Go ahead.
Yeah. Look, did I like the proposal she had about price gouging? No. Do we know the details of it? We don't really know them, but some of what's trickling out suggests this might be more like the things that states do, which I think are also mistaken, but are a relatively small and inconsequential mistake, not the type of sweeping price controls that some people have described it as. You know, for me, though, when I heard her convention speech, I didn't hear her mention this. I heard her talk about economic growth, optimism about America, opportunity. I think those are the things she cares about much more deeply than this bit of a misfire proposal.
I promise I'll get to Kevin Hassett. I promise. But is there a thread, Jason, consistently running through the Democratic Party of populism that just makes it incumbent upon, I guess, people running for office and people in office to bash corporations? I mean, at the same time that President Biden or Kamala Harris pointed out that we came back from the pandemic better than anywhere else, and that, you know, I've created 15 million jobs. You know, it's the private sector that's doing these things. It's our vibrant private sector economy, maybe in partnership sometimes with government, maybe with guardrails. But why the corporate bashing? Do you agree with it all the time? Is it always about corporate greed, all our problems?
Look, I think there's too much populism in both political parties right now, too little recognition that, as you just said, you know, it's the businesses that create the jobs, the businesses that are raising real wages, and the government needs to help create the conditions to contribute to that. But again, there's a big difference. I mean, you're going to get to the tariffs in a moment. Some of the populism we're hearing on the Democratic side is populism light. They're very targeted tariffs. They're this very targeted price gouging proposal. On the other side, you have 10% tariffs on every single country in the world, every bit of vegetable, fruit you get from another country, a toy you buy, all of that going up in price. So I think there is a real difference in scale in terms of how the populism is implemented by these two candidates.
Okay, Kevin, now your turn. This is not your father or grandfather's conservatism. It's like, I don't know what it is sometimes that we hear from Donald Trump, whether former President Trump, whether it's, you know, suggesting that the president should have a vote on the Fed's open market. You know, the tariffs, there are some bonkers ideas that come out of that side at this point. You probably have trouble defending.
Oh, I mean, if you have a specific thing that you want to talk about, let's.
You don't want to. Okay, 20%.
No, I'm just saying,
tariffs across, not targeted tariffs. Tariffs across the board on anything.
Right. Well, the headline tariff policy for President Trump is the Reciprocal Tariff Act. And what he wants to do is immediately set the tariff in the U.S. equal to the tariff that other countries charge us. And I'll send Steve Leisman a chart, because I know he loves charts, that shows like the tariff we charge on other guys and the tariff they charge on us. And, you know, even like our best trading partners, which are probably the Europeans, they're charging double the average tariff rate that the U.S. does. And that really upsets President Trump. And I would expect that next year, that he would pass something called a Reciprocal Tariff Act, maybe even a reconciliation, and that would basically induce probably countries around the world to reduce their tariffs to our rate. But if they didn't, then probably that's going to be will go up. And the thing is that there are a lot of countries like India which are like 20% above us, and so I guess the question is, how high does our tariff go on guys like that? And I think that the cap on that would probably be 10%.
Jason, you're probably so tired of trying to defend, I don't know, maybe you like the capital gains, the highest ever at 45%, or unrealized capital gains, but you must have things. I mean, tell Kevin what is the most heinous suggestions you've heard.
Yeah, he was a little fussy in the interview with Elizabeth Warren over the price gouging versus price controls debate. That was shared quite a bit. And it seems like he's still got some of that going.
So much bad policy from the left. I'm not going to agree with every details, but broad strokes, I agree. But look, the problem with the tariffs is you can do this unilaterally. The president has the authority to raise tariffs to 10%. I haven't heard him say it's reciprocal. I've heard him say 10%, possibly 20% on every single country in the world.
It's in the platform, Jason. It's in the platform.
Something
you don't
actually need. And there's a big difference. I mean, the price gouging we were talking about before, you need 60 votes in the Senate. So might be a fun thing to talk about on the campaign. It's just not going to happen. These tariffs are going to happen. When it comes to the Fed, I think that's an even bigger risk. But he probably won't be able to do what he wants to the Fed. I don't think he would succeed. But if he did, that would be devastating to the most important and effective institution we have in our economy, one that he has just absolute contempt for.
Kevin?
Okay, so we'll talk a little bit about Trump.
All right, I'm going to pull off this a little bit. I want to, I thought it was interesting. I saw this. This is someone here, talking about the job. It's T.S. Lombard talking about joblessness, and talks about sort of his own sort of rule for evaluating whether or not we're in a recession per, the Somme rule, as we've heard like a million times now. And he's a doubter. And so this is this guy, Dario Perkins, and so he looks at this thing called the Perkins rule. He his own sort of interpretation. But let's take a peek here at what he says, because he does mention that the idea is that in a contraction in employment, and you have a recession when that occurs, there's not a gradual drift higher, but something rather more rapid, right? And this is what you've seen here, is a bit more of a gradual shift on the right versus all of these other times where it's continued to rise. So he mentions that when employment declines, it hurts confidence in spending, which hits revenues and triggers more joblessness. This is basically the self-fulfilling vortex. Falling employment is central to the dynamic. And so this is where he suggests the Perkins rule, which asks whether or not payrolls are declining, and I guess that depends on how you read the data, I suppose. But anyway, I didn't find this part this useful, this little chart here. But he goes over here as a monthly payrolls change and looks at all the sort of different periods of time. But we're not really on here in terms of where we fit in. So I wanted to get to some of his conclusions, and he says there are several problems interpreting the Somme rule. I didn't really love this one. Here he goes, this isn't a regular business cycle. It's hard to distinguish between normalization and genuine weakness. I mean, this is basically, in English, this time is different. So I always get a little nervous about that, because it seems a little loony. You would write that and not consider the implication there of what you just said. But all right. Jobless rate comes from the household survey, which looks artificially weak compared to payrolls. See, and I think a lot of people would dispute this. Many would dispute this given the households was more accurate post BLS revisions. Strong labor force growth has driven most of the rise in unemployment and the unemployment rate. It's harder to tell. Is employment growing? Okay, this is basically a reference to labor force participation. Reference. Hey, if more people are participating, maybe it's okay that the unemployment rate is rising. I don't know. I don't really know how to feel about these challenges. I'm not really heavily convinced by a lot of these, but I don't know. I thought it was interesting to mention. We'll see. We'll see what else we have as well. It's always interesting, going into a recession or a soft landing. Everybody is kind of right to be confused and concerned because they're just some of the things are just unknowable. It's unknowable as to whether it's a soft landing or a recession while you're at the start of it, and that's what makes it hard. So much conflicting information. Oh well. So let's see what else there is. Barclays catalyst for thought. Let's see here. S&P 500 forward volatility term structure illustrates how equity markets are keeping their eyes on the Fed, jobs, and inflation as a potential September rate cut looms. Despite some recent progress on broadening, we think heightened volatility around Nvidia earnings indicates that big tech is not stepping out of the spotlight. Oh, for sure. Options indicate that over the coming month, the most important potential catalyst for equities remain Fed, jobs, inflation, big tech earnings. Yeah, much as it was in spring. But we leave the predominance of these potential catalysts illustrate how inflation, jobs, and big tech remain primary narratives. Right. Well, you still got to get to the election narrative as we get closer to that. I think that's actually one of the reasons why you started seeing... Oh, that's it? That's lame. I feel like that was redundant. Like, duh. But some folks think that one of the reasons we started seeing Bitcoin run and actually over 65,000 for a period of time this weekend was because of Trump beginning to gain the lead. But it's a little neck and neck there between Harris and Trump right now. Take a peek here. Capital good orders, we just saw that. Tomorrow we'll get housing price, FHFA house price index, confidence board. What else here? Mortgage applications, GDP revision. Oh, that's interesting. So on the 29th, we'll get the GDP revision. We'll get PCE. Is that all on Wednesday? Wait a sec. Today's 26. Tomorrow 27. Wednesday's the 28th. Oh, that's the 29th. That's Thursday. Okay. Let's throw in Nvidia PM here. And then this is Thursday. And we get retail inventories, jobless claims, pending home sales. I guess Thursday you'll get some numbers like PCE and these other items, which will be interesting. Well, first on Thursday you'll get that for GDP for the quarter, and then for the month-over-month PCE, you'll get that on Friday. So we'll say quarter PCE. Thursday, some of those numbers shouldn't be that big of a catalyst, but whatever. Look at August 28th in terms of earnings. Affirm, Chewy, Salesforce, CrowdStrike, Nvidia, Okta. It's going to be a big day. The very next day, you'll get Marvel, Ulta, Autodesk, Dell. Oh, that's interesting. Inflation data, freight index, Shanghai to LA. This was skyrocketing there for a while, especially after the Houthi attacks. It's come down. Zillow rent index down. I like this chart. 30-year mortgage rate, mostly because I'm so exposed to the mortgage company. Used vehicle index, rolling 6-month changes, still basically at flat. U.S. market intel, tactically bullish. The events of last week built confidence in the bullish view, stemming from a still expanding economy, positive earnings growth, and a Fed that is set to ease. While the upside appears to be more muted than when we had adopted this stance earlier in the year, there remains material upside. Ooh. Look for this SPY to enter a new all-time high. I always get nervous when the institutions say, oh, we're going to all-time highs. Like, I always start thinking the opposite. We like the barbell trade, some tech, semis, and some cyclicals, banks, credit cards, autos, transports, home builders. Okay. Risks to the bullish view. Japanese CPI next week could introduce some volatility. Oil spike for geopolitical. I don't think so. You know, now that we're hearing an Iranian attack is not imminent. I'm not too worried about that. This is true, though. Positive earnings growth and a Fed that's set to ease. Let me give those some validity here. U.S. election. Yeah, that's a good one. Especially as we approach the debates. September 10th and October 1st. Mark that on your calendar. Don't travel that day. Stay home and watch. Okay. Stronger data could lead to views for 0. Otherwise, we're debating 50 or 25 for the Fed. Fear and greed they're throwing on here. We're still sitting in a little bit in that fever. International markets. Boring. Consumer confidence, only a touch soft. This is a modest decline. Especially since January placed them on an upward trend. That's fair. Let's see here. Hedge fund flows were slightly negative. Who cares? Selling reversed in some consumer stocks, restaurants, packaged goods, autos. Thematic flows. IT, baby. IT is nicely positive. Okay. Equity rotation. Equities are no longer a one-way upside trade, instead increasingly a two-sided debate on growth downside risks, Fed timing, crowded positioning, rich valuation. Yeah, I mean, I think that's a good way to put it, right? This is from one particular analyst. They sort of summarize commentary from Call, and they suggest that equities do have downside risks now. It's not just straight up, mostly because you have to deal with the Fed timing, crowded positioning, rich valuations, and election uncertainties. I don't think so much the geopolitical. Current market pullback, in our view, primarily driven by fears tied to weakening growth and repricing of recession probabilities. Divergent Fed between Fed and Japan. While the recent market flush took some froth out, equity positioning and valuation still remain a risk, especially if growth continues to decelerate and the Fed does not show urgency. Our house view is that the Fed will cut 50 at both September meeting and November meetings, followed by 25 at every meeting thereafter. Wow. That's interesting. I didn't know JPM was double 50 here. Muslov. At an index level, we stay cautious on equities, expecting the phase of bad is bad to arrive, where stocks weaken as bond yields fall. Ooh. Bad is bad to arrive, where stocks weaken as bond yields fall. Well, I mean, I expect bond yields to fall. Against that backdrop, one doesn't play risk-on trades. It is pure defensives that should be on top. Softer earnings, lower yields, risk of concentration unwind, complacent sentiment. Again, I'm not so worried about the geopol anymore. Entering this year, investor expectations were for a Goldilocks outcome, growth acceleration, quick Fed easing. starting in March. That didn't materialize. Oopsies. Fed will start easing, but in a more reactive way to weakening growth. Investor outlook is still overly complacent. Yeah, I agree with that. Concentration risk is high. VIX has not had a proper capitulation. That's true. Yeah, you need more than like a one-day sell-off. Sell-off in risky assets and rally in government bonds in early August was likely amplified by deterioration in liquidity. Yeah. Excuse me. Yeah, I mean, but this question here that I just popped up is all predicated on, you know, how many people have not prepared for the carry trade now? Right? Like, with the Fed dropping rates, will the USD become weaker? Yes, theoretically. That's what's supposed to happen. And that's why they wrote on here, pay attention to the Japanese CPI release, because that could widen that even more, leading, you know, their central bank to want to raise rates. But I don't know. Usually I feel like when you get these sort of black swans, so to speak, like the banking crisis, you don't get it again. Like, people sort of are like, oh, well, that was close, you know, and then they try to prevent that from happening again. It would just seem wild to me to see it happen again. It could happen again, but I think it's more likely to be something different. Thanks for the $5. YouTube will take 30% of that now. That's all right. What has the market's reaction to economic news been telling us about investor positioning? Despite the correction in risk assets, financial condition impulse remains supportive. This year's stablecoin expansion has largely been a reflection of the increase in total crypto market cap. Okay, what else? It's a nice little summary here. I like this. This was useful. All right. Let's listen to Jimbo.
Friday was that maybe there's an expectation that things are going to be a very good soft landing, but it's being countered, David, by the overemphasis of Nvidia. Yeah. I mean, you go from Friday, Jackson Hole, okay.
Oh, somebody writes, first day of classes starting today, going to miss hanging out with Kevin and more. Oh, well, thanks for that. You'll get through it. Have fun. You know what I find is the more you tell yourself you like school, the easier it is to get through it, even though everybody hates school and you're lying to yourself.
To the market.
It kind of helps.
It's
It's like, oh, yeah, I get to go to my math class.
To the basic thesis that did power our market higher earlier this year for a period of months. And we should say, obviously, it's last week Jackson Hole. This week it is all about Nvidia.
Well,
in terms
okay,
of
so we have
the
two
quarterly
things.
results. We do get them again after the bell on Wednesday,
Yes, we do.
which gives us even 2 more days to talk about it.
Well, we can start now. There are
let's
two
start.
people.
I like how the person in the chat who's like, tax unrealized gains, couldn't order the words correctly. I support unrealized tax gains. It's correctly would be, I support taxing unrealized gains. Or I guess you could say, I support unrealized gains tax. Anyway.
Listen, we have so much money that we have to start buying back a huge part of our float.
Maybe he's a bot.
Jensen, I think, has to talk about how it didn't really matter that Blackwell was somewhat delayed. Because there are more customers than ever. In the meantime, the H200, which is a very high margin product, will help them. Now, one of the things that's great is David, you don't do fantasy.
I don't do fantasy. No,
Okay,
I'm a purist.
I live in a fantasy world.
I'm a purist. I like to watch the teams I like, and I don't like to be thinking about the other team's player who I may have in my fantasy
all right.
team doing better against my team. So
my reality is subpar. So I have an alternate reality that's much more fun.
Okay.
And
bring us into your alternate reality,
Okay,
Jim.
my alternate reality is that Ben Righteous, who I've now become, I go back and forth with him, don't get anything in.
Ben, you want to tell people who this gentleman is?
Ben Righteous is the CEO from Melius, who the company takes very seriously.
Okay.
And anyone who watches him and reads him knows that he's a serious practitioner of the game, as was his father.
So he's a serious analyst who covers Nvidia.
Yeah, his father was when he ruled the chemical industry.
Right.
And he says he does what's called a triple Lindy. He says you have to do a triple Lindy. It harks back to the Olympics, and he says that you need to beat 2 billion this quarter. You need a guide up of 2 billion, and then you have to have, this is really fabulous, say enough to imply that Q4 grows by another 2 billion. So it's 2 billion, 2 billion, 2 billion. Thank you, Ben, who is, I think, the best at the whisper, which obviously matters to people at home, meaning that there's a kind of a sub rosa effort to be able to say this is what needs to be done. I like this, and the reason I like it is because this is where Jensen can blow things away.
Again, so the idea that you need an upside guidance of 2 billion on top of whatever, so it's 34 billion or so.
Right. Now, remember, 2 billion is huge. I mean, even if Apple were to report and there was 2 billion upside, people would say, wow, I guess it's a new cycle. We got to start buying. I think that what will happen is that you'll hear about, could you stop that with the wire?
They have wires.
Stop with the darn wire. I'm like trying to focus.
It gets caught in your feet.
Well, the sneakers you wear, which not even, are they Nike? What are you wearing?
No.
Hoka?
I got
okay, there we go. We're going to get to Nike and you're wearing Hoka, so I didn't know you were.
This is so ridiculous. Why? I don't understand. Why? Sometimes I feel like I come here and then I'm like, just shake my head. I'm like, what's going on?
Economic expansion in the U.S. without the consumer. So that discretionary spending piece is very important. I do expect, though, that retail spending will continue to slow down a little bit, or at least cool a little bit, as customers continue to look for ways to save money as inflation stays elevated.
I wonder how much SoFi paid to get her on both these stations all the time. She's always on CNBC and Bloomberg.
Still have a market
with prominent branding.
More than 100 basis points of rate cuts priced in to futures markets. So if the market does not see those cuts materialize, what does that mean for equities? Can you really have a significant risk on posturing here when we're so uncertain about the trajectory of rate cuts?
Well, I think the key word in your question is uncertain. If we somehow backed off of this rate cut expectation, or the Fed started to send a message that they were going to go more slowly with the cutting cycle than the market currently expects, I think what we would need is more certainty about strong economic data to prove that that's going to be okay. Basically, the market would need to understand that the economy is strong enough to absorb higher rates for even longer because the data is strong. So we would need to still see very, very solid labor market numbers. We would still need to see very solid consumer spending numbers. We would continue to need strong fundamentals, strong corporate earnings results in the third quarter. And we would also need to see manufacturing pick back up again. So there would have to be a plethora of good news to support the market. As we saw on Friday, the market wants rate cuts, and it reacts positively to the idea that cuts are coming, or at least that the cutting cycle is beginning. So if we backed off of that, I think we would need something commensurately positive on the other side.
Well, Liz, how much confidence do you have right now in the strength of the labor market? Because that absolutely has been the narrative of the past few years. Of course, you think about the Fed's hiking cycle, you've seen that resilient labor market, but then we go to last week, of course, those payroll revision numbers that we got, 818,000 weaker than maybe we thought here. I mean, what is your current thinking on the labor market and how that wraps into Fed policy?
Well, it's clear that the labor market has cooled, but we needed it to cool. It was way out of balance a couple years ago, way too tight, way too many open jobs, not enough people to fill them, and that had its own host of problems. So the fact that the labor market has cooled has put it in better balance on the business side of things, which I think is good, and then all of the fears over a wage price spiral have abated, which is also good.
All of that's gone. All right, this is boring. We're not really going anywhere. Well, we'll talk uranium instead. Thank you. Tales from the crypto. Kevin, is uranium trade on? I don't know. I'm curious also how which sort of candidate is actually going to push some better energy policies, which might affect uranium thanks to nuclear production. But let's see here. There's some notes here we could look at. That'd be interesting. What is this? So uranium ETFs could be recharged by a new nuclear renaissance. That sounds kind of redundant. Anyway, uranium ETFs might get a renewed boost from the U.S. restarting shut nuclear reactors like the one planned in Michigan. These funds, which were referred to as green investing for realists, are now halfway to our prediction of becoming a $10 billion category by the end of 2025. They can fit into portfolios in small doses as speculative bets contemplating a low-cost core. Okay, so what I think there's one ETF. It's here, Sprott Uranium Miners. This is uranium miners, so I guess it's not really like spot uranium. But yeah, it had this like crazy run, and then it sort of retraced back down a bit. So then you've got. I want to take a look more into that. Let's see here. See what we can get. U.S. government is helping to fund the reopening of nuclear power plant in Michigan that closed 2 years ago, was set to be decommissioned. On track to begin producing power again in 2025. Nuclear energy currently provides about 10% of the world's energy. I'm just surprised we don't do more. I'm going to write down some notes of that. U.S. Reopening Michigan nuclear power plant in 2025. That was closed in 2022. That's cool. We got 10%. It's an interesting topic. 10% of the world's energy comes from nuclear. What is this? More plants opening or expanding in the U.S. The newest is the Vogtle facility in Georgia with 4 reactors. Huh. Write that down too. Vogtle facility in Georgia opens 4 new reactors. I want to look that up. Vogtle facility. Let's see. So Vogtle. Let's see. What? It seems like. Oh, it's been there for a while. Largest nuclear power plant as of 2013. Wait. So is it getting expanded? Oh, the 4th unit is getting commissioned in 2024. Oh. Okay. Oh, that's cool. Yeah, I'm just looking at the wiki for it. So I always feel like when you look at something on wiki, it's kind of like ChatGPT. You kind of have to fact check it. Just a handful of teensy-weensy disasters and no one wants nuclear anymore. Yeah. I don't know, I feel like nuclear is probably on net safer than most of the other fuel sources. You could say something bad about every kind of energy production, right? So anyway. Okay, let's do this. So that's interesting. Opens. So they don't open 4 new reactors. They open their 4th new reactor. That's 4 in 11 years. Yeah, that's a little different than just opening 4 at once. Uranium ETF assets grow by 30x. Wow, that's crazy. 15 minutes to market open. Musk and Gates have endorsed nuclear. Yeah. All right. That's an interesting topic. Little interesting takeaways there. Okay. What else? U.S. futures waiver as investors assess rate path. That's boring. Goldman's Ruber sees FOMO. Okay. Here we go. What's this? Strong flows from corporate buybacks, systematic funds, and retail investors are expected to push stocks higher in the coming weeks, according to Goldman's Rubner. I always am skeptical when Wall Street's like, oh yeah, it's definitely going to do one thing. I'm like, it's going to do the opposite. I always get sussed out by them. Rubder estimates there will be 17 billion of demand between robots and corporates every day. Will that be enough to keep the bears away? However, warns that 3 weeks from now, demand may run out, which may skew to the downside. Hey, what good is that? Options market is implying a 9.3% move on Nvidia. The bar for Nvidia is a lot lower this... Oh, that's an interesting line, though. I find that interesting. So, Nvidia. We know that Nvidia reports... Oops. That's funny. Okay. Oh. Breaking things. Alright, there we go. Per Goldman's Rubner, bar for Nvidia is lower for Wednesday PM earnings as tech has had a bit of a sell-off. 9.35% implied move. That is very interesting. Other catalysts, I guess we could write down for the week. We had, let's see here. Oh no, I don't play earnings. I see the chat. I mean, sometimes every time I do, I lose. It's just like I think my odds of winning on an earnings bet is like 25%. And the reason I say that is because you don't just have to be right about direction, but you have to be right about magnitude, and you have to be right about the market's reaction, right? So like, you could beat earnings, and the stock could go down. You could have an option for a beat, and the market implies a 7% move to the upside, and the stock moves up 5%, and then you get burned. Like, there's so many reasons why you get burned playing earnings. Like, the odds of winning an earnings play, even if you're fundamentally right, you still have to be sentiment and magnitude right. That's tough. That's tough. But anyway, other catalysts this week. I think really the big ones that people are going to care about. 0829 is going to be GDP, QOQ, and then of course maybe retail, wholesale inventories, and unemployment claims, and then of course both of those are on the 29th, which Nvidia is the 28th. That's Wednesday. Thursday is the 29th. And then 30th. Let's see here. PCE on the 30th and UMISH. 0830. Friday, PC and U of M sentiment. All right. So, what else? Harris should fight Trump with better Bidenomics. As crypto enters politics, common sense loses out. All right, let's see what's going on here. Oh, and did you see the thing on the CEO of Telegram? I'll say, let's get some more details here. I saw he's like held in Paris or something like that. Yeah, detained in France. Detained in France. Claims that Telegram fails to properly fight crime on the app. I mean, isn't that like the point of Telegram? That like, if you're gonna like do like illegal things, you do it on Telegram? I mean, I thought that was the whole point of the app. But anyway. Let's see here. 39-year-old Russian-born billionaire stopped north of Paris, stepping out of his PJ. Oh, that sucks. From PJ to jail. Charges haven't been pressed yet. Local court has to decide by Wednesday whether or not to press charges. Arrested after landing Le Bourget. Le Bourget Airport, north of Paris. Alright. The arrest warrant was issued by Offman, a French agency set up last year to prevent violence against minors. Oh, interesting. Including allegations include the spread of sexual abuse material against children. Well, that's bad. That is very not good. Okay. Telegram says it's absurd to blame the owners for that. At the heart of the case is a lack of moderation. Oh, that's what the organization is suggesting. What does that stand for? Offmin. That's got to stand for something. Nah. Okay. Offman is a French agency that issued the warrant and argues lack of moderation and cooperation of the platform, in particular in the fight against crimes against children. Secretary General of Offman wrote. Interesting. Huh. May also face allegations enabling drug trafficking, promoting terrorism. That doesn't surprise me. Going for the CEO. That's crazy. Is it though? Telegram was created by Durov and his brother Nikolai. That's great names. It's like so Russian. Durov and Nikolai. It's like if you ever have the privilege of having Russian drivers, you have to nickname them Pick Up and Drop Off. Who knows what that's from? Then you've got, let's see here. Actually founded some other social media thing. The Contact. Something that became popular in Russia, which he sold. Oh. This is why some people were like, oh, Elon could get arrested. Interesting. All right. So that's 6 minutes to the bell. What else we got? Let's see what else people are chatting about. Somebody says, geez, Kevin, look here. Congratulations. I don't know what to look at. Oil pumping hard. I don't know, some of y'all are spamming some Chinese names. Yeah, I think Baba was down like 3% or something, but PDD or whatever is down like 20%. Kind of crazy. It's these online, these ADRs for these Chinese companies. They just go crazy with volatility. And in September 22, Pinduoduo's sister company Timo was launched in the U.S. by PDD Holdings. So PDD launched Temu US, basically. That's interesting. I mean, if you ever bought stuff from there, it's like kind of utter trash. Sorry if anybody really likes it. But yeah, I mean it's gonna have a little red candle, I suppose. What about child exploitation program on Instagram? I don't recall seeing France or UK talking about Zuckerberg. Well, probably because he's their puppet and does whatever. Oh, sorry, I shouldn't say that. Why isn't the media covering Israel? I don't know. I thought. You mean the Hezbollah attack? I've seen coverage on it. I guess it depends where you're looking. Molten core salt explode if any moisture enters the power plant and reacts violently with the molten salt. Ooh, I'm just talking about nuclear here. Let's see here. It just looks like there's some kind of debate going on in here. Okay, all right. Well, anyway. So, okay. Let's go listen into CNBC show. Oh, it's not up yet. Okay. Boring. So, what else? What else? Harris should fight Trump with better binaries. Vice President Kamala Harris set out her economic agenda last week and will doubtless say more when she speaks again. That's boring. No, we haven't actually gotten too much detail. It'd be very nice to get some more detail. I have a video coming out on that soon. Crypto enters politics. What is this? Good news, business interests are getting support during the election year. Bad news is that business is crypto. Why is that bad news? Less than 2 years after the industry's high-profile political donor was exposed as a criminal, the lure of campaign donations from digital money crowd is once again proving irresistible. Last time SBF lavished cash on candidates in hopes of laxer regulations. Yeah. Industry is good at grabbing headlines. Blah, blah, blah. All right. Mr. Yance. Wow, just a little donation for being a super dope dude, Kevin. Ah, thanks. It's all the tequila. Keep the commentary coming. The world needs it. Oh, thank you for that. I appreciate that. That's really nice. All right. Somebody says, any comment from Tom Lee? Tom Lee blocked me, so I don't see any of that guy's stuff, and I don't really care. So let's see what's going on here. He's added to the list of losers that has me blocked. He's as weak-thinned as people like Grant Cardone and Chamath Paper Handatila. Who else? And Michael Burry. Oh, little weenie babies. All right. So somebody's like, oh, well, you got the bell.
Did touch all the way up to 180. This was the horrible quarter Amazon. Hey, looks like you should buy the horrible quarter.
There it is, opening bell for this Monday. Take a look at the real-time exchange back at our headquarters. Here at the big board, Autism Science Foundation and Rides Far. That's an annual cycling benefit doing the honors. Over at the NASDAQ, Sinclair's tennis channel, joined by a champion there as well. All right, let's get...
Sinclair's tennis channel is pushing the button at Nas? Okay. Whatever. All right, so what do we got here? The Qs aren't really going anywhere at 14 bips right now, 12 bips. See if they pick a direction here. Tesla's dropping. How about Enphase? How are we doing today? Oh, Enphase is going up. Wow, 126. Still have exposure to Enphase. Thank goodness. Keep mooning. PDD. What do we got over here? 23. Look at it, tank. Why are the bars so small today? I feel like usually they're bigger. That's what she said. Okay. What else? Apple. Apple slightly negative. Microsoft also slightly negative. Oh, Microsoft's like tanking. How about Nvidia? That's also red candling. Yeah, look at that. Red candle there on the Qs. Oh, Tesla just like, oh my God. Oh, what the hell is happening? The first few minutes of vol here, just going kooky dookie. Kooky dookie. Oh yeah, that's, now there's a sound bite we'll have to ask the AI to make. Kooky dookie. Gold's up 25.59. Bonds 10 years down about 2 basis points. Let's go. TLT to the moon. Skyrocket. TLT is up 18 basis points. Tesla's doing a little oopsie doopsie. Oh, that Temu US version, whatever. The Tangy Doos law. The first few minutes are always volatile, though. Bill.com's up a little. Where's the entertainment? Palantir, 80 bips. Oh, it tried going green there for a moment. Target. Watch Target today. Where are you going, Target? I'm just trying to get away over here. Come back. Come back to reality. All right. What else? Bill.com, Peloton, Enphase, Ubiquity. Those are your movers right now. And then towards the downside, you got Elf, Baba, Apps, 25% now on PDD. The ADRs have such thin liquidity too. It's not a surprise to see them kind of blow up. Tesla has a lot more liquidity, and it's just having a little rough morning. But the first 5 minutes are always kooky. Yeah, see, look at this. It'll just giant green candle back up. Actually, the Q's just gained the lead. Look at that. All right, let's listen over here for a moment. That's why the first few minutes of trading are just like so directionless and crazy.
He's pulling back
when he names a successor, let me analogize to Elliott, because I know we
analogize. Now there's a $5 word.
We don't necessarily think that everything that Elliott has done is done not without the authority of the top, but we do know that it's diffuse. The person who has the letter signed in Southwest is an actual portfolio manager.
Yeah, no, that's true. The activism in particular at Elliott, I mean, it's run by Jesse Cohn, who's a longtime partner there, although still a very young gentleman.
I don't see Jesse's name on this.
No,
but that doesn't mean Jesse disagrees with it.
No, but it goes up and everybody signs off on these things.
Right. Well,
you're not able to just go off and do whatever you want. I cannot imagine that the Apple position
Nvidia is almost up 1% now. It's popping a little bit. So is Enphase.
August 30th. I cannot imagine that he would not have some say in that.
Well, let's say he had a say. The idea that the stock should drop dramatically on him having a say, I think is going to turn out to be something you don't want to follow.
Okay.
And I mentioned Bank of America because the trim of Bank of America after a total home run makes a lot of sense.
Yeah.
But that has knocked Bank of America to 40 when I think the Bank of America...
Wow, AMD 157 right here. Look at that.
Buy!
Nice little rocket as well as Nvidia there. So Apple, Microsoft, Nvidia, all barely green over here. AMD popped up. Enphase holding on to that 3%. Tesla's really struggling a little bit. 216. Q's lost the lead again. BTC is losing, what is this? 63.8, which isn't great. Yeah, you can see it's almost like you keep getting rejected here, but it's sort of a weird pattern, honestly. Yeah. Palantir's down about 1%. Ammo, 64 bips. There goes Apple and Microsoft again. Yeah, a little. I feel directionless right now. I feel like I'm just like floating through space, unsure, uncertain.
Everybody else there is, so I'm not going to go with that.
The key consideration, and I know the New York Times had a long story on it today as well, is as far as I've been able to determine, is this $1.4 billion promise that Nippon Steel has made, but has yet to delineate in any way in terms of, is that simply, is that going to be new investment or simply what is needed to maintain current investment?
Okay, I think that's a
great
question.
And they have not, as the union, gotten any clarity on this. And the union, obviously, at this point, remains opposed to the deal, as does, of course, Cleveland Cliffs.
Well, that's
was
what
he
I want
on
to
with you recently?
Yes. I think Lorenzo Gonsalves is going to get this company.
Don't care.
no, VIX is not at that headline 65. It's not in that sharp rise anymore. We've kind of stabilized on headline numbers, but all those secondary factors that we watch so closely in derivatives are really continuing to show nervousness. And the reason is institutional memory is quite short. So when realized volatility is quite low, that's all you remember. But when you've had recent spikes, it's hard for investors to forget that. And so maybe they're not betting on large moves, but they're certainly
Go end phase, end phase, end phase. 4.41.
Major difference, because for the first 6 months of this year, no one wanted to hear the word hedge. They didn't want to hear the Cassandra story, and that has changed.
What's interesting about this idea of hedging is how much more expensive is it getting to hedge at this point? Are we going to face a point in this year where that risk becomes so prominent that it becomes too expensive to put on some of those hedges at this point?
You know, it's interesting you say that. I think this is one of those really counterintuitive things about the options market, which is when hedging tends to be low, no one wants to do it. And also the reality is it doesn't pay off. It actually takes that pickup in expensiveness to get people thinking. And of course, why are we in this situation? We have situations in the Middle East. We have an upcoming election. We have the potential dragging of an Nvidia story, right? There are all these things, all these cross currents that are coming to bear. And it's shown that the market from a positioning perspective can react quite negatively.
Ooh, Bill.com wants to run 5% on Bill.com. Almost now 5% on Enphase. Let's go. 130 is really like your next level here at Enphase. Actually, I have a line at 132. It seems like 130 would be a psychological stopping point, but pretty good run there on Enphase, honestly. So Enphase clearly running on rate cut enthusiasm. You've got 10 years only down 1 basis point right now, so yield expectations right now pretty flat. Oil's up a little bit after the Hezbollah attack, up about almost 3% there on oil. Gold's up about 60 basis points. Nvidia struggling to hold on to its 1%. Tesla's still down 1.3. Microsoft and Apple keep bobbing between green and red. Very directionless right now. I mean, look at that mess. Which way is it gonna go? Pick a direction. Ugh. Yeah, I don't know. Okay. Let's flip a coin. Quick, somebody get a coin. We're gonna get a coin. We're gonna decide, is it gonna go up or down? Up or down today? Up or down? I don't know. So, we'll see if, who knows? Sometimes you get, like, some attempt at moving up the first 15 minutes, and then it just tanks. Or maybe it'll skyrocket. Anything can happen. That's the entertaining part. It just doesn't seem like there's a lot of enthusiasm to really keep a pump here. But I guess we'll see. AMD just lit it out a little bit. Nvidia, look at that, though. It's going into earnings. Earnings Wednesday afternoon. Obviously, we'll cover that live, because why not? I think that'll be pretty entertaining. So, we'll go through the financials, the earnings call, and I'll tell us how great this multi-trillion-dollar server build-out opportunity is. I mean, the stock's been up pretty much every time after earnings. There were a couple times last year it was like flattish or bled a little bit, but it wasn't a big deal. So, bonds barely down 1% right now on the 10. How's the 2-year doing? How are we doing on the yield curve? The yield curve. Do I have a... Oh, there goes Nvidia. Do I have a button for a yield curve? That'd be fun. I have this.
The Nike swoosh. Big W. Long PP.
Gotta love pricing power.
Buy, buy, buy!
No, I just have bond market.
Bond market.
I'm surprised I don't have inversion.
V-shaped recovery. Data dependent.
House of pleasure.
Reamed. Fetch me, doopy.
All right. So where are we? 2-year is... Oh, interesting. The 2-year is actually higher right now. and the 10-year is basically flat. Oh, they're both moving in that direction. Okay, so you're not really going anywhere. 210. How's Disney? Disney's up at 91. How about, let's see here. News. Chart. 210 inversion is -11. Okay. I mean, we're pretty close to uninverting. And I hate to say it, but that's a bad thing. Like, usually it uninverts during pain. So, inversion. This is now the -11.3 BP. This is the highest level of inversion, or I should say uninversion, since basically the first 2 weeks of Aug. So, closest to uninversion since first week of August. Okay. All right. Oh, you're getting some red over here now, aren't we? Look at that. Apple legs down a little bit. Microsoft leg down a little bit. Nvidia leg down a bit. Tesla's still holding on. Enphase leg down a little bit. First 15 minutes have spoken. The Qs went from 0 to -15 basis points. Bitcoin's rotating down. Okay, all right.
The same kind of love. The NASDAQ 100 down 0.2%. Small caps getting more of a bid with expectations of rate cuts around the corner. You have the Russell 2000 index up about 0.5%, Katie.
All right, it's time now for our top calls. Some of these analyst action in focus this morning. And first up, Argus Research says that Wayfair no longer a buy. The firm cutting its rating on the online home furnishing retailer to hold, saying that the company's prospects appear muted in today's high interest rate environment. Next up, Daiwa Securities giving Target a buy rating and boosting its target on the big box retailer. Target, of course, reported earnings and sales last week that topped estimates. And finally, Telsey Advisory Group cutting its price target on Lululemon to $360 from $470. Analyst Dana Telsey also moderating her sales.
Somebody writes, market to JPOW. Iceberg, dead ahead. I love that. That's great.
Amy Lou Silverman, RBC head of derivative strategy. And, you know, Amy.
Y'all remember that video? We should pull that up. Let's see if we can pull that up again. Me, Kevin, Titanic. Let's see if I can do this right. Buy the dip. Buy the dip. Oh, that's so good. Who remembers seeing this? It was the ghost of inflation. Hold on, where is it? I think it's this one. Oops.
Fuck me! Pick up, you bastards!
Here we go.
Is there anyone there?
Yes.
Iceberg, right ahead!
I love it. Ay, ay, ay. Okay. Let's pop on over to the Sizz.
At Dow and gotten the same negligee, but instead I went to Temu for a little bit less. Now, David,
what is happening there?
Okay,
though,
they have
more
to say they have to
specifically?
invest a great deal. Now, one of the things that really hurt
Wait, are you moving on from PDD? That's
no,
it?
get this.
Oh, okay.
When you look at what Amazon had to deal with, and when you looked at what Meta had to deal with, it was a dramatic pushback, pull in ad spending. Who? Temu. If Temu comes back, oh my, you want to buy Amazon. I mean, when I was out at Amazon, this is really important business. And Meta missed it. And
Meta,
by the way,
Meta, that right, from Shein and Temu or Team.
Well, if you buy Temu from Amazon, you actually get a date.
Yeah.
If you buy it from Temu, whoever that is,
Temu.
You don't really get a Temu, because I say if you look at where the geography where it's from, it's not clear. You don't really get a date. So let's say you wanted to buy women's lingerie for a woman's birthday. Okay. Not only is it flammable, but
happy birthday! Here's a thong. Jim, what?
All right, but your point's an important one in the sense of that they start investing more because Meta had a couple of quarters there that
Well,
were
that's the
fueled
thing.
largely
Maybe when they say
in
they
terms of the
invest.
guidance increase, or I should say the excess of what analysts were expecting by spending from those two entities.
Well, I think if they come back and invest, the price point of Temu is so low that it's tempting to think that maybe who you buy it for does not particularly mind being involved with the natural gas industry.
PDD is losing 26% of its value today.
Well, that's because they have to invest much more. They admitted that. Now, look, Temu, let's give it its due. If you go to Temu and you don't buy women's lingerie, there's a lot of things there that are so inexpensive that you just say, you know what, I have to buy them and just own the stock of Waste Management. You buy them, send them right to the landfill, and WM goes up. So I am recommending if Temu's spending more, you buy Waste Management. Now it's called WM, so let's be careful.
Okay.
But I think WM goes much higher if Temu. And by the way, if Shein comes back, I mean, you can buy some of the secondary waste companies.
Shein no longer planning, certainly not an IPO here in the United States.
So I
He's basically calling it such trash that if Temu comes back up, you should buy trash management companies like Waste Management. Oh.
Short tenor, you really only have 10 feet to make that left turn. So what I've been saying is your early warning system, which is what the derivatives market has been, is getting shorter and shorter in tenor. And so when you get these spikes, Monday, 3 weeks ago at this point, I think people are less ready for that. And that in itself has caused some psychological nervousness.
Another question I have is really outside of the S&P 500, what we're seeing, because one popular trade that became quite unpopular through most of August was that Russell 2000 small cap trade. And now we had Jackson Hole. You now see a bid in that Russell 2000 today. It's just a day, but you still have it outpacing what you see this morning in the NASDAQ and the S&P 500. Why, frankly?
The best anecdote I can give to you, I was marketing in Toronto maybe a few weeks ago, kind of 30 clients in a room, and I said, raise of hands. This is while, Russell was doing quite well. How many people think that this kind of rally is sustainable and the rotation is here? And I got like 3 sort of hand raises. And that just tells me a lot about how much buy-in there is, because ultimately when you get these flights to safeties, where do they go? They go back to the big boys. And you really see that in the underlying options positioning. You don't see that IWM call skew lifted right now. And I frankly, personally don't think it continues. I think it really depends, obviously, on the rate story. But when you actually look at positioning and pricing, it's not there. That exuberance is nowhere close to what you see on the mega cap trend.
That's really interesting. So, I mean, we don't have much time, but just to really distill that into a single point, that hot and cold options trade or that rotation trade, you aren't seeing the follow through in the options market.
Not at all.
Interesting. All right, Amy Wu Silverman, it's always great to catch up with you. Appreciate your time on this Monday. She, of course, is RBC's head of derivative strategy. Now, coming up.
That was really boring. Okay, so Nvidia just gave up like all of its gains almost. Look at this. It's up 28 basis points. It's trying to bounce right here. I don't know if it's going to be able to. I mean, it's the downtrend here is like 8 minutes long now so far, so not fantastic. But okay, it's literally about to turn red. Jeez, Lord. Okay, so okay, all right.
Lost the lead.
Yeah. So, wow, Nvidia just went from 1.5% to negative. Well, I guess we figured out the direction for the day. That was surprising. Tesla over here is kind of stable. Enphase, pretty stable. Let's see here. Amazon. Ooh, Amazon rotating down a little bit there. Let's see here. What else is going on? Palantir's down 2%. Space Mobile's down almost 5%. Okay, so you got some more movement here. Let's see here. PDD down 26.6. Elf down 28. Alibaba's down almost 5. Tesla's basically stable there at 1.39. Peloton, Enphase, they're doing pretty well. Ubiquity's up 3. I don't know how a firm is up 1.8 on bad sort of consumer news, but okay. Qs appear to be like a little 6 basis point bounce there. I don't know if it'll last. We shall see. Okay, do we have any news coming up at 7? I don't think we do. Sometimes there are catalysts to trade off of. Let's see here. No. Dallas Fed manufacturing activity at 7:30. Well, that's boring. Q's now reversing. Let's listen in over here.
Solar's back, dude.
And
remember,
energy.
that's an interest rate play, not a.
Yeah, Nvidia
Gain the lead.
That said, EOG and Devon are about. That's oil.
Interesting because those shouldn't be up. They have a lot of that. EOG has more oil.
Yeah, EOG's oil and gas, but there's definitely a move in
portfolio.
energy as well, with Exxon also up almost 2%. Given
it could be Middle East.
the increase of hostilities in the Mideast. Up next, we're going to have Stop Trading with Jim.
Nothing. What about Fox? See if they have anything for us.
I think a pro-crypto candidate actually has a chance of winning that election. Now, Fairshake, that's the PAC that has received the most crypto corporate money. They shared this statement, quote, "Our mission is clear, support candidates who embrace innovation, want to protect American jobs, and are committed to working across the aisle to get things done and oppose those who don't." Now, thus far, crypto companies have shelled out $119 million this cycle. The majority is coming from Coinbase and Ripple. Those are two major players that have been at the heart of the industry's battle with regulators. And the crypto vote could move the needle. 1 in 5 Americans own crypto, and 73% of those share a candidate's stance on crypto will impact their vote. It's also why the currency has become a key issue in the presidential election. Research from the Stand With Crypto PAC shows that in 5 swing states, the crypto voter outnumbers the 2020 presidential margin by 8 times. Now, VP Harris, she's fighting an uphill battle here. Most in the industry argue the Biden administration has waged an all-out war on the space. So the VP's team has been reaching out to key players, but her lack of a specific campaign stance has many questioning whether she would really be pro-crypto here. Now, President Trump, he's all in, though. He's made a slew of campaign promises, and he's been teasing a decentralized finance platform for weeks. He posted, quote, "For too long, the average American has been squeezed by the big banks and financial elites. It's time we take a stand together."
He's getting so many donations from the financial industry and crypto. It's kind of makes sense. I wouldn't be surprised. There are a lot of dinners getting bought by crypto right now over at the Trump campaign. Anyway, I think that that'll do it here. We'll head over to the Course Member Live. Keep an eye on Nvidia. It's barely positive right now. And I'm going to push
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It's not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
Crazy. All right, folks. Love y'all. We'll see you soon. Bye.